Okay. Cool. I'm ready when you are.
All right, let's do it.
Cool. All right, let's go. I know we're getting started a little bit later than we planned on. I couldn't get the actual live stream to hook up. I think I was having internet problems. This is Living in the Inland Empire. This is our live section of the channel where we, cover a few kind of what's going on in real estate, special topics, kind of what did we see in the market this week, and then cover a few news articles that I thought were interesting. And usually I try and get a guest on. Today it's Cody. He's usually kind of there to kind of support me, but I kind of gave him free reign to hit on a few topics that he's seeing in the mortgage and the lending world that might be of use or helpful to some folks. So you just want to dive into it, or how do you want to go about it, man?
Yeah, so I want to get into it. I think one of the first things I want to go into is the cost of taxes and insurance. I had this come up recently. Had a client out shopping, and they were confused when I sent them a payment on a house that was about 550 because they were like, "Well, you said it was a fixed rate, so how come the payment is so much different than what you originally quoted us?" So something to keep in mind when you're purchasing a house is the interest rate that you're getting is fixed, meaning you have a fixed interest rate on the mortgage itself, meaning the principal and interest probably aren't going to change. 99.9% of the times people are getting a 30-year fixed rate mortgage. The taxes and insurance can change on a home. So your taxes can be different from home to home and your insurance can change. Especially right now, insurance has been pretty tough because insurance, obviously, we all know insurance costs are going up. So,
Yeah, insurance has been I mean, it's really been screwing a lot of us up. Somebody on
mhm.
here said that YouTube was having some server issues all day. But we're talking about 30-year fix. This is on like 30-year fix, right? We're not talking arms
No.
or okay. So 30-year fix, your rate's fixed, but your insurance and your taxes can adjust.
Yeah, every property has different tax rate. Older homes have a lower tax rate, and newer homes have a higher tax rate. And then homeowners insurance can change depending on if you're in a fire zone or what the case is. So the estimate we give you as lenders up front is going to be really close, but it's going to change, depending on the property and what year it's built and where it's at and things like that. So those are just things to consider. I just had that come up recently. The client was very confused, which I get it. Obviously, you get a payment and you're told it's fixed and not going to change. Well, there's different aspects to the payment that can change. So that was one of the main things I wanted to go over really quick too.
Yeah. So with the insurance changing, I mean, because when I bought my house, actually, I've had it happen twice where my insurance got canceled. One time was the first time was I was in the house for about 3 weeks and I got that cancellation.
Mhm.
That sucks, and there's nothing that we can do to control that. Because when you're going through escrow, your shopping rates, oi baka, I don't know what that is, but sometimes what will happen is the insurance companies they'll give you a policy, and depending on what time of year it is, they can change their criteria or what they're able to insure. Yeah, do you see that? I see it a lot lately. I feel like the last year it's been more than ever. Somebody gets into a house 2 months later, they're sending me a cancellation notice.
Yeah, it happens still. I've been seeing it a little less than I was seeing it previously, but it's still happening. Um, I think insurance is obviously, as we know, became a huge issue. So it's one of those things that we do our best when you're in escrow to get you as many quotes as we can with people that we work with and trust to avoid that happening. But if you end up going with someone that you want to go with and you bundle your car insurance with them or whatever the case may be,
Mhm.
there's nothing that we can do about it. A lot of people want to use their own insurance company, which is totally fine. We just
Yeah.
say, "Hey, look, we don't really work with them as much as we do these people. It's totally up to you, but here's like kind of who we trust. But feel free to go with whoever you want to."
Yeah, no, like with the bundling thing, I've never really seen that. I don't see it where it's cheaper too often. It seems like it
Mhm.
usually ends up being more. It's just I think it's more of a convenience thing on the buyer, consumer, borrower, whatever. I don't really see it being a much better deal typically.
No, it's not a landslide at all. I mean, if it's cheaper, it's very like minimal. And either
Yeah.
way, the insurance company is still getting paid out of your mortgage through your for your homeowner's insurance, and then you're still paying your car insurance separately. So you're not really, unless you're one of the people that aren't impounding your insurance on your mortgage. then it might be one of those things where, okay, yeah, you can pay them both at the same time, but that's pretty rare too.
Yeah, and if you guys watching need a good insurance people, a good insurance person, I have a few I can refer or recommend you to. Of course, it's no hassle. It's nothing that I make money on. I just know it's lately it seems like finding a good insurance agent is really tough. I got a couple I'm actually trying to get on here for the next few weeks. They get a little skittish about doing these types of things, but if anybody's looking for a good reference, I can absolutely send you in the right direction.
Hmm.
So now with the other one, taxes, those can change. What would affect that, or how does that get affected? After the close of escrow, you already bought the house, you got your purchase price. What would change on taxes after the fact?
A lot of the times you get a supplemental tax bill after you close escrow. So that'll be within a year or so after you buy the house. Um, this surprises a lot of people. It can it varies. We have ways to calculate how much that's gonna be. So at least it's not gonna be a surprise to you, but you will end up getting it. It won't change your tax rate that you're paying on your mortgage payment, but it will be a separate bill. That's just a one-time thing though. So that's something that really surprised people. But it depends on when you purchase the property compared to when the seller purchased the property, and the value differences. And there's a couple other factors, but um, that's the main one. Typically, your actual monthly payment doesn't really change on your property taxes unless there's like a service or issue or something like that, which is rare.
Okay. Yeah, I mean, I don't really hear too many issues. I know usually after about 6 months or whatever it is when people first buy the house, that's usually when they get that big scary bill. Or sometimes they get money back. Do you know why they would get money back versus getting a bill?
The only reason why you would really get money back is if you, for some reason, were paying too much in taxes from the beginning. Um, it's rare, especially with all the technology now. We have a lot of ways of telling how much you're going to be paying and why, and all these different tools we have through title and stuff. So, but yeah, I mean, it is possible. Typically not the case, but it has happened.
Okay. That's always a good thing too. I remember actually when I bought this house, I actually got a reimbursement bill, or a reimbursement check, which is actually really cool. It kind of sucked at first because it turned out I paid a lot extra, and
Mhm.
I called my lender at the time. This was 6, 7 years ago, and he's like, "Oh, you're probably gonna get a reimbursement check." So
Yeah.
nice little bonus a few months later.
No, for sure. That happened to me once on this house. I got a reimbursement check. I noticed my escrow account balance was like extremely high. Now
Yeah,
that's kind of like your first hint, and I was like, must be overpaying. So I just kind of like went about it and kept paying it. And then sure enough, they ended up sending me a reimbursement check. I was like, and then they went back to a normal range where you would expect an escrow account to be. I was like, oh, okay, yeah, that makes sense.
yeah, always a good thing.
Yeah, not bad. That was the one of the first things I wanted to go over just because it was fresh top of mind for me. I just had someone bring that up with me recently. Another thing I want to go over is the cost of mortgage insurance and what is it. So this is
The
a
cost
big
of mortgage insurance and what is it? So
yeah.
okay, yeah, let's go.
So this is a big one. This is like one of the things in mortgage as a lender to me that's so blown out of proportion to the consumer is mortgage insurance. I'm
Mhm.
not sure where that happened or what happened. People are like, I do not want to pay mortgage insurance.
Yeah.
But they also don't realize that if you have excellent credit and you're putting 5 or 10% down, this is like $100 a month. Like your homeowner's insurance is more. So there people are so stuck on this cost because it's one of those things that you could potentially not have if you put 20% down
Mhm.
or less in some special cases. It's so strange to me because everyone acts like it affects their payment so much and it doesn't. So that's all I just really kind of wanted to touch on. Mortgage insurance, don't be so scared of it.
Yeah.
For those of you who don't know, mortgage insurance is insurance for the bank, where basically they'll be backed up if you default. So it's not anything that's actually it's an insurance for the bank, not an insurance for you as the buyer. But mortgage insurance is something that every mortgage loan has unless you put 20% down. FHA loans have them for the life of the loan, and conventional loans have them until you get to 80% loan to value. which is a fancy way of saying a 20% equity position or 20% down. Um, so the thing about FHA loans is that the mortgage insurance is a fixed rate. It's always 0.55% of the loan amount. So
0.55% of the loan amount. So if you come in with a little bit extra, that 0.55 is going to be on, say you have a loan for 400,000 and you're doing a 3.5% down. So what would that be, about $12,000? So your loan would be about 388
mhm.
versus if you came in with 10% down, your loan would be about 360.
Yeah, the total loan amount will be a little higher because you have the mortgage insurance premium, which is a separate thing. But yeah, roughly yes.
Okay.
Yeah, so it's 0.55% of the loan amount on FHA, which is typically comes out to 200 to $300 a month. And that's standard. If you put 5% down, it's like 0.50%. It changes a little bit with a slightly increased down payment, which most people don't do that on FHA because if you can put 3.5% down minimum, most people want to do that, which is understandable. Um, and the mortgage insurance cost on conventional is based off of your down payment and your credit score. So it changes. So if you put 5% down or 3% down conventional as a first time home buyer, you're gonna have with a 800 credit score, you're gonna have different mortgage insurance than someone who put 10% down with an 800 credit score, and so on and so forth. All these things are factors. So typically what I tell people is you're going to see a little bit of a interest rate increase from FHA to conventional, but you're going to
Hmm.
see that conventional has the cheaper mortgage insurance. So it's kind of give and take. So that's something that was important for me to note because I think the mortgage insurance thing has gotten really out of control compared to like really what it should be. A lot of people are acting like it's do or die to not have mortgage insurance. And like I said, it's really, I mean, yeah, I have had so many buyers where they come to me like, Cody, I want to put 20% down. I want to buy for 700,000. Okay, great. So you're going to put 140,000 down plus closing costs, so on and so forth. You're looking at, 160 grand out of pocket roughly, let's just say for conversation's sake. Well, then I'm like,
Yeah.
well, you could just put 10% down, 70,000, and then you're closing to save you $70,000 out of pocket, and your payment really only goes up, $300 or something, or whatever the math comes out to be, right? Um, and they're like, oh wow, I didn't really think about that. But people have this thing stuck in their head that like MI is like insanely expensive, and it's really not. So
Yeah.
just something that I wanted to touch on. I thought it was interesting, and I've just been
No,
seeing.
I think it's a good talking point because that's something I have come up a lot. When I have people come through, whatever open houses, call me off the internet. Jesse Gonzalez said, "Guys, you made my night." Ah, awesome, man! I love to hear that. Which part about that was the good news? Throw it in the comments, and we can elaborate on it.
Oh, the
But
Dodgers hat, bro.
oh, is that what I didn't wear my Dodger hat tonight. I was wearing too much blue, but yeah. Anyways, yeah, dude, that was a wild game. But yeah, it seems like that's one of the bigger misconceptions is, one of the first ones is that people think you need 20% down, which isn't true. You come in with 3.5, but that difference in down payment, if you're coming in with 5,000 more, 10,000 more, it's really not that much, monthly, like, because we get a lot of people, they want to outsave the market. You know,
100%.
they have this notion that if they can save an extra $10,000 this year, it's going to save them hundreds of dollars next year. Um, it's better to pay 20% down if you can. It depends on the situation. If you can, yeah. But
I would say
that
that's true.
20%,
If you can
what's
pay
that?
20%, I would say if you can pay 20% down, it's better if you can. Honestly, if you could buy the house cash, it's better. Like you can keep going,
Yeah.
like of course, 100%. If you could put 50% down, it's better,
Yeah.
just about what's
But
realistic for that specific family, really.
exactly. It's everybody's a little bit different. Reason I say it's not it could be, it couldn't be. If you can save on the MI, yeah. But that 20%, coming in with an extra 17% on the house, the monthly expense isn't really going to be as much as what people usually think it is. If you're coming in, let's say $500,000 house, that's a little lower than average in my city, Moreno Valley. You're buying what you're the numbers guy, but $500,000 house, you're coming in with 3.5% down. That's about 15,000.
Hmm.
If you come in with 20% down, that's about 100,000.
Yeah.
So, that extra, what was that, about an extra 70 grand? That's about what, $350 a month?
Yeah, probably 350 to 370 depending on your rate. Yeah.
Yes, yes, okay, let's just say 370 on the high side. So, having that 70 grand or that extra 50 grand in cash versus not having it, it's situational.
Oh,
If you can afford it,
100%.
yeah,
I've had
absolutely.
people that want to put 20% down or have the ability to or whatnot. And some people, and I show them that, like, hey, here's how it looks with 10% down, just so you know, or even 15, just so you know.
Mhm.
Sometimes they're like, we're still going to do 20% down. And some of them are like, well, I kind of like that 10% down option because I was thinking about remodeling this and that when I got the house. I'm like, okay, great. So it's one
Yeah.
thing if you're going to put the 20% down and then not go back and try to pull equity out of the house, that's great. But if you're going to put the 20% down and then be like, dang, I wish I wouldn't have put that much down because now I want to do all this stuff to my house, that's different.
Yeah. Yeah, or if you put everything you have down on it and then, 6 months down the road, you're in a bind.
Yeah.
Like, thank God for a home warranty, but, like, something goes out, like HVAC or, you have an issue with the cars or something, and, you could use that an extra 5 grand for that. It's, you could get yourself in trouble with it. So
Hmm.
it's just, it's all situational. It's gonna be, per person. But
100%.
yeah, I find a lot of people, when they're looking at the actual raw numbers, they elect to, even if they can come in with 20-25%, typically they elect to come in 5, 10%
Hmm.
and, pocket the rest.
Absolutely. I think it's just situational, like you said. And I mean, if as long as you're willing to do something, whether you put 5% down or 10% down or whatever your down payment is, whatever works for you and your family or whoever. And I
Mhm.
think it's better to just do it rather than wait around. That's the number one thing that gets people is just waiting. I mean, we've seen it so
Yeah.
many times.
Yeah, yeah, going back to the point I was making earlier about, people trying to outsave the market, I mean, in the last 15 years, I haven't seen one person make it work.
No.
Now, if it's a difference in what neighborhood it's going to get you, like because you're waiting for a pay raise or, the 3.5% in, let's say, San Jacinto versus Corona, obviously that's a huge difference. That's absolutely something to consider. But, I just see a lot of people come in who are in a position and, the market jumps up more than they can save.
Yeah, 100%. And that's just it. I mean, it kind of depends on the situation. And I mean, how fast are you really saving and all these different things? But yeah, a lot of times you can't outpace the market. And it's not to say that that wouldn't work in like another state. Like, I mean, I'm licensed in almost every state. So I do a lot of stuff out of state. And I see that, you know, when you're in a market where the average price is 250 grand and it goes up 5%, it's not a big deal as if it is here where everything's already 700 grand, not everything, but I'm speaking in
Yeah.
in context,
Yeah.
like
And
pretty much
that's actually a good point. I didn't think about that, because, if on average it goes up 5%. So if you're in another state, or, out here, let's say average price is 600, this time next year it's going to be 630. Year after that, we'll keep compounding 663. If, you're in a state where average price is 200, 250, it goes up 5%, that's what, like
yeah,
10
to
grand?
10 grand, yeah. Like
Yeah.
you can manage 10 grand. Like
Yeah.
going up 35,000 is like in a year is like trying to save that is way harder.
Yeah. Yeah.
Um,
No, it's an extra job.
Yeah, for sure. I mean, given that obviously in places where the average cost is 200 to 250, also the wages aren't as high. So it's kind of an even playing field too. You can argue both sides, but it's just something to consider. Like it's just one of those things. I've seen it with so many other people, like clients we have, other clients I have, where it's like they're just waiting and waiting for probably a deal that's not going to be there, to be honest.
Yeah, I hate saying that because I fully believe in like real estate, but if you're waiting for the right deal, it's timing it is just so it's not the best plan.
It's interesting, like you see how investments work and they compound over the years. Like it's really about owning your house for a long period of time rather than it is like owning it at the right time.
Yeah,
Like I like to do like some the investing in like the stock market some and um if you do like the calculations of someone that starts with let's say $10,000 at the age of 20 and invest 500 a month compared to someone that starts at with 30 when puts 10 and puts $500 a month, like it's a huge difference because one of them has 10 more years in the market, you know. And real
Yeah.
estate's the same way. It just starts compounding over the years. So it's really interesting to look at that from the investment side and be like, wow, like, it doesn't really matter when you acquired these, let's call them stocks. It just matters that you kept them for this long and held on to them.
Diamond hands.
Yeah, pretty much. Yeah. So that's just something that, like, I mean, the stock market and the real estate market are, of course, very different, but they do have some characteristics that carry over because it's still an investment platform in a sense. They're both in that investing, and you're still putting money towards something and not trying to cash out on it right away and stuff like that.
Yeah, and with stocks, I mean, they're both a long-term game, but one of the cool things about the stock market, versus housing is you can invest incrementally. It's $100 here, $50 here, whatever.
Mhm.
X% of your paycheck. If you have like a 401k, real estate is just very much more. It's this.
Yeah.
I
Sure.
did see this thing, and I am working on a video for this where you can buy fractional shares of Airbnbs.
I've
Have you ever
seen that.
seen that?
Yeah.
I saw that last week and my mind was blown. I was trying to do it for this. I just haven't had the time to research it to where I could speak to it. But it's like almost like how like Robinhood or whatever Coinbase you could buy fractional shares. You can do that with Airbnbs.
That's wild.
It's
So
a trip.
basically, it's kind of like a profit share, like sort of thing, where you're gonna get some of the revenue, I'm assuming, and things like that.
Yeah, it's kind of what I understood with it is like what a real estate investment trust, a REIT is.
Yeah.
How you can buy like pieces of condos.
Yep.
It's kind of like that, but with like SFRs.
That's kind of cool.
It is kinda cool, but it's also kinda scary because they were
It
saying that,
is.
a few years ago when, the stock market was having a hard time, they thought it was all these, kind of fly-by-night day traders, tanking the market.
Oh yeah, that makes sense. I mean, it's one of those things where you get a lot of volatility when you let a mass amount of people into the market, like if that makes sense.
Yeah, and then,
Um,
everyone's kinda writing speculation or doing it, like, uneducated, so you get too many people in there not knowing what they're doing, it could blow it up, like, I know, like, investors have been having a hard time with that because a lot of fly-by-night investors were doing that, like, during, the COVID years. So
right.
it kind of messed up the investment game for a while.
Yeah, no, for sure. Yeah, it's something to consider. I didn't really think about it like that, but I mean that makes sense for sure. Um, That's interesting. Yeah. Another thing I wanted to go over, I actually did this math the other day, so I remember it off the top of my head. I can't, I know I have a calculator in here somewhere, but I don't need it for this. So a lot of people, obviously, this is the interest rates are the number one thing. And I feel like I'm harping on it. I don't want to spend too much time on this. I just want to go over it really quick.
On interest rates,
Yeah, because everyone's so worried about rates all the time, which
it's the
makes
most interesting thing in real estate right now. It's been that way for the last couple of years.
it literally
Other
is.
than like, is it going to crash? It's when are they going to come down?
Right, and they are coming down. Are
Yeah,
they don't come down fast. They come
yeah.
down slow and they go up fast. So are they going to be better in the next months? Do I think yes? That's a different conversation. But I just did some math the other day where if you have a mortgage rate, let's say it's at 6.25%, and that same rate goes to 6% or a 599, and you have an average loan amount of, I'm trying to do this for the mass, not just SoCal, like just like kind of a majority. Let's say your
Yeah.
loan amount's 400,000. The difference between 6% rate and 6.25% rate on a $400,000 loan is about $80 a month.
Hold on. So
So
6.5 versus 6 on 400.
no, six and a quarter versus six.
Okay, so a quarter% is about $80 a month.
Yeah. So people, because 599 on paper looks really low compared to 6.25 is the
Hmm.
reason I'm mentioning that. So it's about $80 to $85 a month is what it comes down to. Most people, obviously in our market, the loan amounts are higher than that. So yes, the payment difference will be higher, but
Yeah.
that's just a good medium to go off of just for quick math.
Yeah, speak as general as you want, man. I get people from all over calling. Like I was on the
Mhm.
phone with a dude from Indiana. It was last week or the week before.
Nice.
I mean, I get emails from like all over the country. So yeah, speak as general as you can. I know a lot of people watch this, or I don't know about these lives yet, but people are looking at like where to relocate. That's kind of what the channel's about. So
Yeah.
I get people from all over. So yeah, if you, even people looking to move out those ways. So hearing these numbers might help them, or give them some insight onto what their next move might be.
Yeah, $400,000 loan is going to be very broad for the U.S. It might be on the high
Yeah,
side for some markets, going to be a little low for others. Um, but I think if you have a 6.25 rate quote or even 6.5, and you're thinking, oh, I'm going to wait till it gets to 599. I mean, you're probably looking at $140 from 6.5 to 599. Um, I don't really know that it's worth waiting, because I mean, one, you're going to be able to refi later anyways when the rates come down enough. So that's good.
yeah,
You're not stuck in the same loan forever. No one is. No one stays in the same loan forever. Um, so that's one thing to keep in mind. And then also, I mean, 150 bucks, 140, 150 bucks, let's say if that's a 0.5% difference, like it's not that much money. Like, yeah, it might be like a family dinner somewhere or whatever. Like you're spending 150 bucks somewhere.
mm,
So, like, it's not a deal breaker. If it was like it's not like a $600 difference or something like crazy. That would be different. Then I'd be like, okay, that's nuts. But it's not.
yeah,
So, just things like that I just wanted to cover. Like the rates, does it make a difference? 100%. It really makes a difference when you have a large loan amount. Like Southern California, obviously, we have people getting six, seven, $800,000 loans, so on and so forth. Those the deals are very sensitive to interest rate because it changes it so much. But if you're doing a two, three, $400,000 loan, you're not as sensitive to interest rate. Like, is it going to change your payment? 100%. But is it going to make it go up and down $400? No, probably not.
yeah. So debt to income ratio wise, it's not a huge game breaker.
No, it's not at all. Typically, at least when I pre-approve people, like I tell you, I leave a little bit of room in it. Like when someone comes to us and says, "Hey, I want my max," like I'll leave a little bit of wiggle room, whether that's for tax increase or the market changing when they're shopping rate wise, or so on and so forth. So something like that wouldn't do anything.
Okay. That's good to know. And then, so I mean, with that said, I guess we could like kind of briefly cover what rates are doing. I know when we talked a couple weeks ago, you were kind of skeptical about them coming below a 5.57 was the number. How do you feel about that now?
I mean, honestly, they cut the rates, did the Fed cut, and exactly what I thought would happen. The market didn't react well to it. I don't think it's the fact that they did the Fed cut that was the weird market reaction. Jerome Powell, who for those of you who don't know, is the chairman of the Federal Reserve. He went on and had some verbiage that kind of implemented that or inclined that maybe we're not going to have a December rate cut now. So the
Oh
market did
shoot.
not do well with that.
Oh
So
man. Okay.
that being said, I mean, it's pretty flat still. I wouldn't say the rates have gotten worse. I mean, maybe you've seen a small worsening on the rates,
Yeah,
but
it literally depends on the day.
yeah, like today, the market was very flat today, which is good. It was
Yeah.
calm, so that was good. Um, I think it's been a little up and down. Like it's been increasing a hair, but nothing crazy. And that's another thing I wanted to cover. So let's say like today, if a lender or someone says like me, like, oh, the market got worse today. That doesn't mean if you're pre-qualified at a 5.75 FHA rate, that doesn't not mean that now you're going to get a 6% rate. Typically, it means like if you had a 5.75 and you were paying a point for it, meaning a point in cost, or your closing costs, 1% of the loan amount, that cost might have increased now because the
Yeah.
market got worse. Or you can take a little bit higher rate, like a 5.875, and then, get that same cost that you had previously. So it's not a huge fluctuation like that sounds. It sounds really scary, but it's not. Um, but yeah, I think that from Jerome Powell, I think that verbiage kind of implying that we might not see a December cut. The market didn't do well with that. So we're kind of waiting on what he's going to do next, and the market just kind of it's going up. It's getting a little worse, but kind of also staying flat. So we're kind of like in a weird little limbo right now, sort of.
Yeah. The rate market or the actual housing market?
The rates,
Okay.
yeah,
Yeah, housing is the same way. It's like I went on a couple listing appointments last week, and the way I explained it is like we're kind of like in this little like bumper area where it's not a huge increase and it's not a huge decline, but it depends on the week.
right,
It's not. I wouldn't even say it's barely like maybe 1.5% either way, and really it depends on the house.
yeah,
the chatter about the rates, I feel like it's like helping. I noticed the last couple weeks it's picked up a lot. Like my phone's ringing a lot more,
Yeah.
and it seems like people are more serious. But it's not. I think there's this misconception that we're kind of going down right now just because of how volatile rates have been. But that's not really the case from
It's
from what I'm seeing, anyways.
No, I think that people are used to we're used to the values going up so fast that now
Yeah,
that the values are going up still, but very slowly. I wouldn't even say very slowly. I mean, it's probably still 2-3% over the year. Um, I would say that probably looks like a decrease, but it's really just a slower increase, is what it is.
yeah, yeah. That's a good way to put it. And typically when it gets this way, and this is what I talk to all my buyers about is, it's the longer, the more houses there are, the longer they're going to sit. uh, Better opportunity to go find a deal. That
100%.
deal is not going to be like 30% below market or anything like that. It's like maybe a little below asking with some closing costs covered, which we're talking about like the difference between putting 10%, 20% down. If you keep money in your pocket, keep money in your pocket.
100%. Yeah, absolutely. I agree. I think that, there's always a good deal out there. I mean, anytime you find a house that you love and it works for you, your people are going to want to buy it.
Yeah,
Yeah. But that's one of the major things that I ask people when they're out shopping, or like when I pre-qualify them up front after I get their documents, and I do a consultation call with them, and I'm like, how long are you planning on being in this area? Whether this area for them is Victorville, or it's Riverside, or it's Corona, wherever it is. And a lot of
Nebraska.
them are like, oh, we're gonna stay there for 5-10 years. I'm like, okay, great. Like,
Yeah.
that makes sense. But if I don't know, maybe a year or two, like, okay, that's when it gets kind of like, like it might not make as much sense now.
Yeah, yeah, a couple years ago it totally made sense, but now it's such slow growth, which that's healthy. It keeps things in check. So but I mean, like we just had those folks. They bought a year and a half ago, and in San Jacinto, but they're getting net enough to cover their down payment on something bigger that they want.
Hmm.
So
Yes.
it's almost never a bad decision unless you can't afford it.
Right.
Because the market does keep going up. Granted, not as fast as what some of us would, or some people would like to see. Just to kind of throw like random nerd stats out there, Riverside County, I think we're up 1%. We started the year at 3% up. Since June, it's come down about 2%. My feeling is that it's going to go up another percent and a half by the end of the year or by Christmas,
Hmm.
just because I see so much more activity than there was. In August, which is supposed to be a busy time. I think we have kind of a delayed spring market,
Yeah.
and that's absolutely carrying over into the Christmas market.
Hmm.
I think we're going to see a busier January, February than we've seen in a long time, though.
Yeah, that's probably true, man. Usually off the holidays like that, the early, January, February, March, first quarter of next year will be, slower. Everyone's getting settled in and up and going, but that might not be the case. You're right. I mean, it seems like now
Yeah,
that there's a lot of action out there right now. People putting offers and inquiries and whatever. So, which is a good sign. I mean, I think it's healthy. We're in an interesting market in Southern California too. Like, I feel like Southern California has its own market. Like
yeah.
this is
Southern
pretty
California
much
has like three different markets. Like, I mean, when you break it all down, probably more
yeah,
than that.
yeah, it's much different than a lot of other parts of the world. Like this is kind of like the major leagues of real estate if you think about it. Like this is like the big shots. Like it's hard, like everyone's trying to do this thing everything here. Like people
Yeah.
want to be here. So it's like we're seeing the movement first, we're seeing the action, but I mean, obviously, there's a ton of people doing it, but I think that it has its own special little economy.
Yeah, and then when you look at like Orange County versus LA County, I feel like those markets get hit harder and faster than like where we're at, more inland.
Hmm.
I've noticed like when you start to see LA move quick, where they start picking up and houses are going for way over asking. That's when you start to see it kind of ripple out to here. It's usually like a month or two.
Hmm.
But I've also noticed that when things turn, the market turns, LA goes down pretty quick. um, we stay pretty flat. It's kind of like we just kind of flatline and we drop a little bit and then we pick up.
Yeah, it feels like LA gets the hit and Orange County maybe a little too because of the price points.
Yeah,
Like when stuff gets soft like that, it feels like the higher prices get hit first, you know. Um
yeah,
it's one of those things where it's like a lot of luxury real estate out there too. I mean a regular house is over a million,
yeah,
but
yeah. I mean, a three
um
bed, one bath is $1 million.
yeah, so when the market, like even just as an economy, that carries over to multiple other things. Like I know, like that you're interested in like the watch stuff too. Like you like to look at that kind of stuff. Um, like that, the like when the economy
Nothing
slows down.
fancy, but
No,
it's
that's
it's
cool.
all
Yeah,
it's all under $100. But yeah,
yeah, but it's
I
still
don't want to sound like a big
interesting.
shot.
No, it's still like interesting to see like you if you look online like at the luxury watch market, like when the economy softens, like those that's like one of the first things to get hit. Like, it's
Yeah,
one of those, like, necessity where people are like, "I'm not gonna buy that right now," you know? Like, "What are you, crazy?" But I think, like, the
yeah,
huge, like, big, expensive real estate's the same thing. Like,
yeah.
it just carries over, like, it just gets softened first, like, it comes back to reality in a sense, which, I mean, I think I don't think that's inflated right now at all, but in a market like that, it maybe would be.
Yeah, and out here, we kind of see like a similar trajectory with like I call them like move up homes.
Mhm.
So like something with like a bigger square footage, like a 5 bed, 3,000 square foot home. Those are when we see those sit a little bit longer. It's usually an indication that the starter homes are about to get hit pretty soon too.
Yeah. Yeah, that's true. Yeah, it's interesting to see.
Yeah,
Everything kinda, like, goes, like, in waves, it seems like.
yeah. It's like once you see like kind of that little upper echelon of disposable income folks, once they get affected, it really does ripple across the rest of the industry.
100%. Yeah, definitely. Um, and we see it like, with people like as far as like doing loan apps, like we see a lot of loan applications in volume and we have a good gauge on what's going on out there and how things are looking. So it's interesting, I mean, there's
Yeah.
all kinds of stats as far as mortgage lenders go, like even all the way down to like credit score, like you start seeing credit scores deteriorate and it's like, it's kind of weird, like that's all stats they look into.
Oh, I bet. Yeah, but like I know auto default has been the big one lately,
Hmm.
or probably the last couple years. But another one that I kept seeing pop up that just seems like it disappeared was the student loans because those all came due. They stopped letting people defer or whatever. Was it in May?
Yeah, well, it was in May. Yeah, so those have been affecting people too now.
Have you've seen it like actually like become an issue lately?
Yeah, I've seen a few. Not anything that would kill the deal, but it definitely made the terms less favorable because
Yeah,
people like didn't have an intention to pay them or didn't realize that they weren't supposed to pay them, and like I mean, it's just late payment after late payment, so the credit score just tanked. Um, it's one of those things. I mean, I couldn't do anything about telling them prior because if I just talked to them a month ago, it's like, what am I supposed to do? But
yeah.
yeah, no, I've seen it. I've seen it actually a handful of times now. So some of them not as big of an effect, but some were like, oh shoot, like that's not good. But definitely, it's a thing. Yeah.
Yeah. Have you noticed the applications on the rise, or has that been pretty flat too?
It's been increasing just slowly. I think it's steady. There. It seems like there's more applications right now. But it's not a huge jump or anything. I think we're seeing like the interest rates improving is driving applications up, but at the same time we're going toward the holidays. So it's kind of like it's trying to
Yeah,
increase, but it's like there's the holiday season coming and I mean it always slows down a little bit around the holidays as we know. I mean typically.
yeah. Typically, it's a funny thing about that is usually this is my busy time of year. November,
Sure.
October, November, December. It's as long as I've been in the business. Quarter 4 has always been like my busiest, and that is absolutely true right now. I'm grateful for it. Like, thank God.
Yeah.
But it's weird. I'm talking to a lot of realtors, and they're just like, dude, it's slow. Like, dude, it's my phone. Not trying to like brag, but I mean, I haven't stopped. I haven't taken a day off in probably about 3 or 4 weeks now,
Yeah. That's
which is
good.
good. I'll take it. Um, but yeah, no, it's I don't know if it's just because I'm putting more content out there or what it is, but I've had a lot of people reaching out.
I think it's everything. It's what you've done 3 months ago and content and everything else. I mean,
Yeah,
I mean, people just. I feel like a lot of people in the industry just expect it to be slower, so they kind of like give up in a sense. I guess. on that?
Yeah, there's a lot of doom and gloom in the industry.
Oh, 100%. Yeah.
I definitely see that. I don't like paying attention to it. I don't like paying mind to it. But I notice when I'm doing because I still do a lot of open houses. Get a lot of agents coming in. They're just really like poopy pants about the economy, the business, the I don't know.
It's hard. I mean, it's one of
Yeah.
those things. I mean, if you're not, I mean, it would be hard to be like a newer agent right now or lender or whoever. Um, it's a tough market if you're not somewhat established and like I mean, another thing is if you're not that established, like, or whatever the case is, like, the consumer can pick up on that, you know? Like,
Hmm.
I've heard
Yeah.
stories of people telling me, like, oh, I talked to this agent and they talked to me like in this way, or lender or whoever. And I'm like, that's crazy. Like, you know, it's not that you
Yeah.
have to be a freaking rocket scientist either. It's not like we're not doing heart surgery here, but you need to know what you're talking about, especially when it's the person that's coming to you as a consumer or buyer or seller, they're already on edge, and just because of
Yeah.
the market, you know.
Well, it's a nervous, stressful process. I heard something a while back that selling a home is it's like psychologically and mentally it's very similar to being held hostage.
Yeah,
Like
yeah,
literally like held hostage. So it's a lot of the emotions and reactions are the same. And it's it's our job. And like what I look at it is our job is to be the unemotional professional. It's we've seen this hundreds of different ways and hundreds of different times. So it's we can't let our emotions or the consumer's emotions get the best of us. It's our job is to interpret the data, go through the process, read the contracts, and abide by them.
100%. Yeah. Um, I think it's just that's all it is. Like have their best interests, and and obviously it's a lot about marketing and things like that too. But yeah, I mean,
Mhm.
it sucks when you hear people like all doom and gloom, but I mean, it is what it is.
Yeah,
It's
I,
not. It's
I
not.
literally left a brokerage once because it was just so doom and gloom. I was like, I can't be around this. It's messing with my headspace.
It does.
Um,
Yeah. No, for sure. You don't want to be
not
around.
to be selfish, but it's just it's you're gonna be the people that you're around. So
100%.
if I'm sitting around complaining about how hard everything is, just it's not serving anybody, to the best.
No, for sure. Yeah, I agree.
Yeah.
That's really all I had for this one. As far as like mortgage stuff, I went over. That's what I wanted to cover. Um, oh, and then I wanted to cover too. I wanted to go over like other costs really quick. When you're buying a house, like what to expect. A lot of people, I guess the only thing like from my end is like people kind of forget, or we tell them up front, but then by the time they go out shopping and come back and have a contract and what have you, they kind of forget like because this is all things we go over, but the only thing that kind of catches people off guard sometimes is the appraisal cost. Um
Okay.
for most of the clients, like I reimburse this at closing, but they still have to pay it up front. It's like
Okay. So anybody watching right now that hits us up in whatever 6 years from now, you're gonna reimburse their appraisal cost.
100%. Yeah.
100%. All right. Cool. I
Yeah.
love it. Rock and
So
roll. Let's do it.
yeah, so they have to pay that up front though. It's $700 out of pocket. It's kind of like similar to like our home inspection, it kind of, you know what I mean? Like it's
Mhm.
one of those costs. Like so, but then I'll reimburse it at closing. So it gets reimbursed all said and done, but up front you have to pay it. So as far as a loan officer goes, being a lender, like that's probably the one cost where people are like, "Oh, I got to pay this." Like, yes, you need to pay for the appraisal in order to get it done. Yeah.
And that's typically about $600.
6 to 700, yeah. It can be more, depending on if you own a rental property and we're trying to use rents from that property. That can add
Okay.
an additional couple $100 if we have to do a rent roll, or a rent estimate on that. But usually it's 700. Yeah,
Okay. And then does the loan type affect that? Like, is it more for like VA versus conventional versus jumbo?
they're all about the same. If you have a jumbo loan, sometimes they want two appraisals. So that can affect it if you're doing some massive loan. Um, so that's something to keep in mind. But as far as FHA, VA conventional, or FHA, VA conventional, on your regular stuff, like the majority of the stuff we're doing, it's all the same cost. It's usually 6 to 700 bucks.
Okay. Does house size affect it?
No,
Oh,
no,
interesting. Yeah, yeah.
no.
Because on a home inspection, house size is factored in.
Oh, really? Yeah, I can see that maybe.
Yeah,
For ours, like sometimes area can affect it. Like if it's in like an odd area or something, that can
yeah.
have a little small effect. But other than that, no, they don't take square footage into account. I mean, maybe if it was like some huge place, they might mention something, but I've never seen that.
Okay. Yeah, good to know. I didn't think it did, but well, if I had you on there, I figured I'd just ask.
Yeah, no, for sure. Yeah, that was it. I just want to go over that really quick, but that's kind of like one of those things where you get an escrow and you're like maybe a little blindsided by it. So something to keep in mind.
Yeah, and I prep my buyers. I tell them, like whatever out of pocket expenses, EMD, which is always going to be, or not always, but usually refundable if something happens. But it, protects it's protected by your contingencies. Outside of that, you got home inspection and appraisal. Sellers, if anybody's watching this and thinking about selling, really the only upfront cost it would be if you're in an HOA.
Yeah, for sure. 100%. Yeah. Yeah.
Yeah.
That's really the latest and greatest that I have right now for the loan game. Um
Okay.
I think the rates on the MI the MI was a big one. I definitely wanted to go over that, so I'm glad we covered that. What else? That's pretty much it. I mean, it's kind of
Okay.
case to case other than that, Everyone has their own situation, their own
Yeah.
concerns, their own worries. Um so um I don't know, it's one of those things where kind of go over it as we go, with most
Yeah.
families.
I actually have like a few questions. With a lot of the new builds absolutely beating the crap out of you guys
Yeah,
with
they're
rates
freaking
and buy downs. Do you
dude.
see? I hadn't even thought about this. I mean, I was kind of it hit me yesterday. Do you see any programs coming out to help with the resale side?
And
Or
not
like,
really,
is there
no.
anything you guys have like talked about or discussed or some crazy like pool like a Cal Halfa type thing?
I don't think that there's not like any lenders with anything good enough to even come close. And
Yeah,
it's hard for us because like the builders obviously they just say, okay, well, this house is going to be 590 grand. Okay, well, let's
mhm,
make the sales price 620, and then we're going to give them 30,000 in incentives. So they think they're getting
yeah.
something for free. Well, really, they're paying for it and it's baked into the purchase price. But I
Yeah,
mean,
well,
it's
they're able
still
to control the comparables, so they're able to
correct. Yeah, and
yeah,
all the comps are houses that they've also built and sold. So it's like you're not going to have an appraisal issue either. So I was thinking about it the other day with the new builds. It's kind of scary in a way where they pad all these incentives in my opinion, because I think it could cause some issues years down the road when people go to sell, because the new buyer is not going to care about all that stuff that was padded in for you as the current buyer.
yeah,
So I don't know. I'm not sure if it will become an issue. I've actually heard people talk about it before. And I've heard people mention it, and I never really considered it. And I was like, maybe that, I mean, it could potentially become an issue, but I'm not sure. But it's just so hard to compete with because, like I said, they
yeah,
just add all these things in. They're giving amazing deals. I'm not saying they're not. The deals they're giving are like nuts. Like,
yeah.
if that's what you want is to buy a new build, I mean, it's wild. Like some of those stuff they're doing. Like,
Yeah, one of the tough things about, like, the resale side, like, because yeah, we sell new builds too, but, like, when I have a listing come up around, like, a new build area, I have to, like, really prep my sellers because like, "Oh, this new build community just popped up, that should increase our values." I'm like, "Okay, well, let's look at them side by side." Alright, cool. If you're $600,000 house and their $600,000 house, they're gonna buy down the rate.
mm,
They're gonna give, whatever, 5 to shoot, I just got one at, like, 30 grand. They give them 30 grand back.
mm.
And, they'll cover your solar. So it's this
Oh, it's
$600,000
nuts.
house is different than this one.
Yeah.
It doesn't necessarily help property values the way people would hope.
No.
That's
No.
one of the big misconceptions I'm seeing right now too. Also, like yeah, we do a lot of new builds. There's a lot of new build tours on here, but there's pros and cons with it. You're buying something new, which is awesome, but also you're buying something very blank.
Hmm.
So some of those upgrades you can find on the resale side, or something like concrete. Concrete is expensive right now. I don't know how that's going to be in a year or two, but you got to do that. You got to do the landscaping. These are all things to consider. like with the new builds too, one of the things I see kill it for a lot of buyers is in California, all new builds, there's no gas, it's all electricity.
I've been seeing that too. It's
Yeah.
crazy. And I think the other thing where you would buy resale is if you want to be in like a certain neighborhood. There's a
Mhm.
lot of really nice neighborhoods in California around our area, but they're already established. They're not new construction, but
Yeah.
they're gonna have like your top rated schools and all the things that you would want and family neighborhoods, of the things that buyers want, especially when they have kids and a family. It's going to be hard to find in a new build community. Not
Yeah.
saying it's impossible, but the chances are slim, you
Yeah, you
know?
have to go through the growing pains.
Correct.
Yeah.
Exactly. Yeah. So that's something to consider. I think the deals they're giving are nuts, though, for sure. We're not even close to competing with them. Like, I
Yeah,
mean,
it
I've
it
done a
kills
lot of
me
new.
too, because we'll get somebody ready to go, and then, they're like, "Oh, we like new build." I'm like,
Yeah. No,
Cody's
it's
gonna yell
like,
at me."
yeah, I'm like, damn. No, I mean, I get it. Like, I mean, I've done a
Yeah.
lot. I'm doing a new build. I'm going to close in 2 weeks in Chino. But the builder couldn't do it, so she's getting the incentive still. It's just that it's a self-employed situation, and the builder's not able
That's
to do
actually a
it.
good point we could talk about right now. I mean, like I was saying, new builds, they snake a lot of deals from lenders, but I mean, I pulled you in on what, 3, 2 in the last year to
Yeah.
save it.
Hmm. Yeah.
Because one of the big issues I find with new builds, and if you are looking at a new build, I would highly encourage you to get pre-approved with a direct lender or whatever a Cody type over here. Reason for that is because I've gotten a lot of people into new builds. They go straight through the builder's lender, boogeyman, whatever on their credit pops up that the lender's not going to check. Say you have a 6 month build or an 8 month build, they don't look at it until like what, 20 days, 30 days before you close.
Yeah. They're not doing.
They look at your credit and your application as a whole. They don't get into it and see what's going to jump up and possibly kill the deal. I get a lot of them where they just go through the new builds lender, and these issues pop up, and then all of a sudden it's almost a dead deal. I have to drag somebody like Cody in or a specialty type lender to save the day. Um, that's important because you've put about 6 months into this. The market's gone up 6 months worth of equity, worth of appreciation. You might be priced out of that market by the time that rolls around. You could be cash out of pocket into some of these upgrades, which some builders do. They require cash out of pocket on top of your deposit.
Hmm.
You risk losing all that by not knowing.
100%. Yeah. I mean, I like, yeah, like you were saying, we've done some where the builder couldn't do it. And I think honestly, like if a new build lent or a new like a builder like a KB or whoever, whatever builder, if they have someone like me or whoever, preferably me, on like the back end, giving like passing them all the stuff that they for sure can't do, like I think their sales would actually go up like a lot because they're very cookie cutter with their financing. And I know they know that, but I think it's like a missed opportunity that they're not thinking of because they're having a they're not moving these new builds as fast as they used to. Like they have a lot of standing inventory and backlog and all these things.
Yeah.
Um,
Well,
so
inventory's been rising, because I have relationships with most of the builders out here. So
mhm.
I get those lists, I get those. I don't want to say those reports, but I get some stuff on the back end that isn't out in the public, and a lot of them are having inventory sit for a lot longer than it was, or they're having their phases delayed because they have inventory they still need to move before they can continue building.
It's interesting. The new build process from a lender standpoint is actually quite a bit different than a regular loan too. A lot of lenders I feel like aren't familiar with it, which I think is why they stick to their in-house people. But
Mhm.
the problem with their in-house people is that they don't know how to structure a loan,
Yeah.
like a difficult loan, whereas I do, and I know how to do new builds. So I just had a lender from some company call me the other day, and they were trying to recruit because he had saw that I did new build stuff, and they wanted a guy in-house to just do new builds, which I'm
Oh
not
shoot.
interested in switching, but they're
It was a new
looking.
build community trying to snake you.
No, no, it was a like a brokerage, like some brokerage company.
Oh, okay.
It
Well,
wasn't.
congrats,
Yeah,
man.
if it was
That's
a
a
new build,
nice
then
little tire pump.
yeah, no, yeah, it was
Yeah.
someone like just like doing a recruiting call, but they wanted to have some new build division, and they saw that I do new builds, but um, it's a little different than usual, but it's not it's hard. It's not hard. It's the same concept, just a couple things are different. But I think it's a missed market for new builds. Like I think if they had somebody on backup that was knew what they were doing like that, like they'd be able to move a lot more inventory. I really do.
Yeah, and absolutely. A lot of real estate is a grind. Because it's very rare that we get somebody that comes in and it's just like, oh, this is what you want, this is what you're qualified for. Easy, slam dunk. It's
100%.
almost all files are going to require some level of finesse or fixing or getting up to a certain level. With the new builds, from what I notice, and this is why a lot of these deals have a hard time. They're just looking for cookie cutter. They're looking for everything fits into a little box, and that's really
100%.
not reality. I'm not a people these days type person, but especially the way things are these days, uh,
Hmm.
you know, credit card debt's at an all time high. Car payments are higher than they've ever been. Student
Yeah.
loans just kind of came back on the books about 6 months ago. People getting beat. They're getting beat up by bills here, collections here, etc. The amount of people that actually come in and are just super well qualified and perfect candidates to buy a home. It's I don't want to say it's few and far between, but it's not as easy as it was.
No, definitely not. It's definitely tricky, and a lot of people's situations are different. Like they're self-employed, or they're going to file their taxes a certain way, or what
Yeah, or they're
some.
behind on their taxes.
Yeah, that too.
Yeah,
So it's
that's a
like
lot.
the new builds, yeah, they're very cookie cutter. So I think there's, I mean, like I said, I like you were saying earlier, we've done quite a few together. But yeah, I mean, they can't do every deal, and they know that too. They'll give the
Mhm.
incentives still. They know they can't do them. They're gonna still want to sell the property either way.
Yeah, well, they're gonna have to, and they don't want to tie it up for 6 months just to go back out and try and resell it.
Right.
It looks bad for them. They get a bad reputation that way, or it doesn't look good having all these homes under contract fall back out. Because the buyers start saying, "Oh, is this something with the builder? Is it something they're doing wrong? Is it a quality control issue?"
Hmm.
It doesn't look good.
No, it doesn't. And they work off quarters. The builders are working off quarters. So
Hmm.
like first, second, third, fourth quarter. So they
Yeah,
have a big push on the end of those quarters to get them sold. Like they want them gone. So
yeah,
and the more they're sitting around, the more it's costing them. They won't ever say
yeah.
that, but it's the truth.
An industry secret. Their quarters, they're running up. Their fourth quarter ends at the end of this month. So this is when they start pushing a lot of their best deals. Where this is November 3rd, 2025. Uh, yeah, if you want a good deal, I would hit myself up. I'll find you the best one possible. But yeah, they're pushing right now to get some of these houses off of their books.
It's wild. Yeah, no, they're giving a lot of good deals, that's for sure. And a lot of
Yeah,
people like it. Like I said, it's a lot of good incentives and a lot of good deals. And I think if it's in an area that you like and you're not stuck on a already very established area, then I mean, for sure, go for it. Like, it's I mean, it sucks for us because like you said, we're getting beat up, but at the same time, like they're pulling all the stops to get these things sold. Like they don't
yeah.
even care anymore.
It's not all of them, but there's one specifically where every time I talk to the rep there, I'm like, man, I feel like you're like lying to me. Like
Yeah.
that deal is ridiculous. Yeah, I just did a video on one of them. It dropped yesterday. But yeah, I mean, they're offering a 2-1 buy down. Their rates are 3.9. I just talked to my lady there earlier. They have 4.99 on conventional.
I'm gonna report your video, bro.
Yeah. It
Damn.
sounds made up. Like when I was putting it together, I'm like, man, I'm gonna get some hate on this one because it sounds fake, but
That's
it's
nuts.
only one builder. Most of them are just kind of like, oh, it's week to week with the incentives.
Yeah, they're not. I mean, they're not giving as any more than they have to. It cuts into their profits too.
Yeah, and I see the way they're doing it. Like there's one I covered in San Jacinto about a month or two ago. And like he's like, solar's included. You got this patio included. We don't have upgrades, so everybody gets top of the line stuff, stainless steel appliances, window coverings. And I got in there and I was looking. I'm like, oh, okay, they baked it into the price.
100%. Yeah.
Yeah, it's like okay. Yeah, I mean the houses are cool. Like if I was a first time buyer, man, that shit is perfect.
Oh, for sure, dude. It's
You
no
know,
brainer. Yeah.
brand new home, minimal out of pocket. Like I mean, it's I hate saying that to you, but it's a no brainer.
Oh, yeah.
Um,
Yeah, no,
but hey,
I have
you're
some
gonna pay.
people that are like looking in like certain areas, like in like Etowanda, like in Rancho, like things like that. I'm like, yeah, it's not going to be a new build, like those are all resale,
No,
which is different,
yeah.
But for somebody that's just like, not saying not picky, but like open to different areas, like, shit, I might be the way. I
Yeah.
need to get in with one of those builders. I have one that I've worked with. Well, she was in Riverside, now she's in Elsinore. But yeah, I mean, they have so many freaking people coming through every day. It's like, geez, like, and they can't do a lot of those deals, like we were saying, So it's a huge
Yeah.
contact.
Yeah. After we get off this, shoot me the info. I'll go do a video there, see if I can, get you some attention in that area.
Oh yeah, for sure. That'd be
Yeah.
sweet. Heck yeah.
Yeah.
Yeah, man, that's it though. I think I mean that's all I wanted to cover. I mean, I think we got got through a lot of it here.
Yeah. Yeah. We covered a good amount. We're just over an hour now. That's a long time. I don't usually talk that much.
All good.
But okay, cool. Yeah, we had a couple questions in there too, which was cool. But yeah. So, anyways, if that's it, dude, thanks for hopping on.
Yeah.
Everyone else, I got another video coming out Thursday. Any questions you want? I do these every Monday, 6:30. Usually, I throw a poll up in my little comment section before. So anything you want answered on air, just shoot me a message or leave it in the community notes. I'll cover it. Gives me conversations to go over. But anyways, thank you guys for watching. We'll catch you on the next one.
Thanks,
Cool.
guys.
Thanks again, Cody.
No problem, man. Thank you.